Hello and welcome to this special coverage of the CLSA's 28th Annual India Summit. And joining me now is Chris Wood, the Global Strategist for CLSA, and someone who's known for his weekly newsletter, Greed and Fear. Chris, thank you very much for talking to CNBC TV18. Pleasure having you from the sidelines of your conference. You've been a big India bull for many years now. You further increased your weightage on Indian equities in your core portfolio. What makes you so bullish on India?
No, I continue to take the view that India, of all the major Asian equity markets, is the most promising long-term equity market with some great growth stocks. The big missing link in the Indian story last few years has been the lack of a private sector investment cycle, which is partly related to the asset quality problem in the banking system. So the good news is that we finally seem to have had a decision by the government to address the need for a recap of the public sector banks. So to me, that was the missing part of the story. Okay.
The other missing part for many of the investors globally has been the earnings pickup. It's been 4 years now, the earnings have not picked up, while the markets have gone up. Are you getting a sense now, meeting companies as well, that earnings are eventually looking to pick up from here?
Well, no, that's clearly a risk. The Indian stock market undoubtedly looks expensive in aggregate. Okay. Foreign investors have not been bullish in India this year. I remember meeting fund managers in January in London. If you talked a bullish overweight story in India, you got a lot of negative feedback because of the valuations, because of the lack of earnings growth. And clearly the lack of earnings growth has partly been related to the lack of an investment pickup and the asset quality problems in the banking system. So to me, now, if we hadn't had the announcement on the bank recap, I think the Indian market would be very vulnerable. Okay. I think that vulnerability has been reduced because people now can see some evidence that the recap is going to happen. In the meantime, the Indian market this year has been driven by domestic flows, not foreign flows. Yes.
I'll ask you about the bank recap. And I was reading your newsletter where you very clearly said that it was frustrating and you moved out of SBI. And after a week, there was a big recap, actually surprised everybody on the street. After the recap announcement, the sheer amount that the government is willing to pay these banks, would you look to add back some of the PSU banks in your core portfolio?
Well, if I wouldn't, that's something I've got to look at this week. But the stocks, because you don't have daily limits in India, the stocks went up so much that it was, I think it was just better to wait and see. Okay. But if I'm running an Indian portfolio, not an Asian portfolio, I definitely would have added public sector banks. But I'm only looking at 25 stocks in all of Asia. But it was annoying because after my last visit to India 6 months ago, after meetings in Delhi, I got the sense that something was going to be happening on the public sector banks. Okay. So that's why I put SBI in. Then I took it out because I was getting fed up of waiting. In fact, the people were beginning to give up hope on anything ever happening.
Sure. The other hope which a lot of global experts are hoping for is the revival in the private capex. You track a lot of companies in that space. You track India also so closely. Are you getting a sense now that the private capex is going to eventually pick up, which will drive the next leg of rally for markets?
Well, in India? Yeah. Well, in India, one would hope that you see some evidence of a private sector capex on a 2-year view if the banking recap happens. Okay. But to me, first of all, we need to see the banking recap. But I'm not keeping all my fundamental view in India is I want to remain invested in the long-term structural growth stories like the private sector banks. Okay. That's got to be the core of the portfolio. Right.
But given that there is such a large recap for PSU banks, is there going to be a challenge for NBFCs and private banks? Because this PSU banks were not having capital, and now they have the capital to fight with the NBFCs and private banks. Is that going to be a bit of a challenge for?
Yes, clearly there's an argument to put more portfolio in public sector banks over private sector banks. But fundamentally, I still believe the private sector banks take market share. Okay. And because of the digital, the smartphones, they can even now expand market share without expanding branches.
Sure. Chris, but I was reading a couple of your news articles, and it do suggest me that you've trimmed down some bit of your overweight positions in some of the large private banks and looked at some unusual name which came as a bit of a surprise for many in India. What was the rationale there?
Well, that's just to go and play a fintech name, and also because the profits had done very well. But basically this year my portfolio has so far done very well. So what I said last night, if it was a real portfolio, I would put a put on because we were getting to near it just to lock in the gains. But the big feature of Asian markets this year is not as India has done well, but the big feature has been China, which is the big outperformer year to date. So in my view, Asian portfolios should need to have big positions in both India and China. But from a valuation standpoint, China still looks much cheaper.
I'll ask you more on China because that will have an impact on commodities as well. But you've been a big, Prime Minister Mr. Modi's fan. The way he's been, making some bold announcements in the last 1 year. Demon was a big surprise. GST was a big surprise. In fact, last week there was a big recalibration on the rates for GST as well. What is your take on GST and, in the way he's making some bold reforms?
Well, I've noticed, I've only been in India about 48 hours, but I noticed there's a lot of negative noise in the press criticizing GST, the multiple rates, a lot of ex post facto analysis of demonetization because it's the anniversary, people saying it didn't achieve its aims. Obviously, we can argue this both ways, but fundamentally, I think demonetization I think politically definitely achieved its gains because the BJP won the UP election. So I think from a political standpoint it was a huge success. From a financial standpoint, well, I would agree that the central bank didn't make a windfall profit. The fact is it is an attack on black money. And so people who managed to get their money clean would have had to pay a commission somewhere down the road, in my view. So it wasn't like it was without cost. Plus, I do believe that demonetization acted as a catalyst to further promote the use of financial assets. And so the right thing to have done when you heard demonetization, if you were a stock market investor, was to buy the stocks geared to financial assets. Stocks like mutual fund companies, private sector banks, life insurance companies. So I think these are all positives out of demonetization. Yes, I don't accept the criticism. Though I would acknowledge that it will have caused some disruption for small businesses.
Has that been the key reason for such a large domestic inflows this year? Because 9 months since the beginning, we've already seen $20 billion of inflows from domestic investors. Is that going to be the trend for the near term, that this financialization is going to continue? Well,
I'm hoping it does continue. And what's really interesting about the mutual fund inflows is they really started when Mr. Modi was elected. There wasn't any flows before that. And it's been going on ever since. But I also have to think we should also acknowledge the fact that we've had, in recent years in India, we've had positive real interest rates because the central bank's been running a tighter policy. So I think there's just the fact that real interest rates above inflation has further encouraged inflows into bond funds as well as equity mutual funds. So I just think this is a long-term positive trend. I also think there's a generational aspect. In terms of the younger generation, Indians, I think, are more willing to invest in financial assets and less culturally inclined to buy jewelry and gold. And real estate. And then, of course, the demonetization has put a hole in the real estate sector. So all this promotes financial assets.
A few on the global markets now. You've been tracking the Trump policies, the way he's been not yet announced any large reforms, so to speak. Your views on the Trump policies and possible impact on emerging markets?
Well, I think the key on a 3-month view, 3 to 4 month view, the key thing is going to be whether the U.S. administration succeeds in passing tax reform, because they are trying to pass the biggest tax reform in America since 1986. So that's potentially a big deal. In my view, this is going to sound a cop-out, but unfortunately, I think it's 50-50 whether they pass this tax reform right now. But it's definitely not zero, because regardless of what happens to President Trump, the Republicans in Congress need a tax reform package passed before the midterm congressional elections. But because they have to find revenues to pay for the tax reform, we can't be sure it's going to happen.
What is your view on the Fed rate hike? Because that again is a bit of a question mark in terms of domestic, in terms of global liquidity and possible impact on emerging markets.
Well, to me, the one rate hike in December is discounted. So, to me, on a 3-4 month view, the tax reform has a bigger potential because there's really, if tax reform is more ambitious than currently expected, it could lead to more of a sell-off in the U.S. bond market and more of a rally in the U.S. dollar. which could lead to short-term underperformance for emerging markets.
Okay.
But on the Fed, in my view is that I'll be very amazed if the Fed really raises rates 3 times next year. My guess is that sometime next year the Fed reverses policy, because my view is that core CPI in America has already peaked, but that's not a consensus view.
Okay. What about the other European markets? Because again, that's where the expectation is that other central banks will continue to pump in liquidity.
Yeah, but so you see, the good news for global markets, this negative that the Fed's tightening, it's negative that the Fed's beginning to contract its balance sheet, but it's not as negative as many think, because in aggregate, G7 balance sheets are still, central bank balance sheets are still expanding. Okay. And Mr. Draghi is going to tighten as slowly as he can get away with. So actually, this year, I'm underweight US equities, overweight Eurozone equities. Okay.
You briefly spoke about China as one of the big outperformers and potential to do further well. What is your view on China and what that means for commodities? Because that will have a big impact on India as well.
Well, the macro story in China has improved dramatically from where we were at the beginning of 2016. When the sentiment on China was very negative and people wrongly thought the Chinese had lost control of their currency. Okay. So that's the big reason why emerging market relative underperformance bottomed at the beginning of 2016, because negative sentiment on China peaked. So in my view, the Chinese economy is much more stable going forward because of this supply side reform. So the key reason I went more bullish on China during 2016 is because we saw evidence that the Chinese were cutting excess capacity in sectors like coal and steel, and that basically has improved the asset quality in the banking system, and that's obviously a positive for anybody involved in steel globally. And I expect those policies of keeping control of capacity constraint policies to continue going forward in China.
So would that mean that a lot of the Indian companies have benefited, the stocks have benefited big time because of the way Chinese have cut down their productions, and also whether it's steel, whether it's caustic soda companies or dye companies, all of them have done really well in the last 1.5 years for India. You think that's going to continue, which means that the Indian companies will be in a sweet spot? Yeah,
in my view, the base case is that the supply side reform agenda is one of the 2 key economic policies of the Chinese leader. So my base case is it continues. Okay. The other key economic policy of the Chinese leader is One Belt, One Road. Okay. Building infrastructure linking China to Europe via Central Asia.
Okay. So will that have an impact on India in some sense?
Well, it's positive for industrial commodities. So basically, these 2 policies are positive for industrial commodities. Supply side reform because it's keeping a lid on capacity. One Belt, One Road because it creates demand for commodities because they're building all this infrastructure. For India, on a geopolitical standpoint, it's a strategic threat. Right. Because China is going to be building supply lines through India's neighbors.
Right. Okay. From a global point of view, Chris, what to your mind would be the key risk to watch out for, at least in the near term?
No, the key risk short term is simply that people have got good gains. Many fund managers are remunerated on a calendar year performance basis. So in the case of my long-only portfolio, when I last checked up over 50%, what I said last night is I would now buy a put on an index to lock in the gain, because I'm locking in my compensation for 20. But otherwise, and we have this Middle East news flow is very historic, but it's also very kind of there's clearly potential risks from what's going on in the Middle East in the short term. In the long run, the biggest risk for Asian emerging markets is simply that Wall Street is extremely overvalued, the US stock market. Therefore, there's just a risk that you get a correction in Wall Street which causes correlated sell-off globally. That, to me, is the biggest risk. Okay.
You expect even India to relatively underperform in the near term. Is that largely because of the crude going up, the macros turning a little...
No, I was expecting India to underperform, but now we've got this bank recap announcement. To me, this bank recap announcement puts a bit of a floor under the Indian market. Okay. If we hadn't had the bank recap announcement, I think the Indian stock market would be more vulnerable here.
Okay. Now, you spoke about flow to the Indian market, but if I want to just ask you, a blue sky scenario for Indian equities in 2020, where the Nifty could be?
No, I'm not looking at it. But we have to monitor the monthly inflows.
Okay.
But I would say if the foreigners see the bank recap happen and the NPLs get written down, then I think I would expect foreign buying of India to pick up.
Okay. Okay.
I think this year foreigners have been selling India and buying China.
Correct.
So foreigners are still overweight India, my guess. But my guess is my view is they're significantly less overweight India than they were a year ago or 18 months ago.
Okay. All right, guys. Thank you very much for talking to CNBC TV18.
Thank you, Raj. Thank you.
Thank you.